Let's bring in now Karl Farmer. He is a VP and portfolio manager at Rockland Trust. Rockland has over $7 billion in assets under management. Karl, welcome to the show. I know you got three stocks you're looking at right now for clients, Karl. Let's run through those. One is Nike. Why does that make your radar, Karl?
No, sure. Hey, thanks for having me on today. Appreciate it. So one of the things about Nike is that people have to realize that this is not a 2025 fix. You could get a pop, and you've seen that when the off and on again tariff announcements. But if they end quickly, you may see a resumption in terms of trying to fix the story. The company had issues even before the tariffs. Trying to reinvigorate the brand. The CEO's been there decades now in terms of coming in and trying to reinvigorate things and repair some of the relationships that were damaged a little bit with the direct-to-consumer initiative. But with the stock not at prices not seen since 2017, this level provides a good entry point should they get back to the $3 to $4 share of earnings power. But they have some work to do.
Another stock that you're looking at is Air Products, big industrial gas company here. Is this one also that is sort of a little more tariff-proof, or is it just, there's going to be demand for its products no matter what? How are you thinking through that?
No, sure, a little bit. So as you mentioned, it's a market leader in industrial gas. It's kind of trading at a big discount to its peer, Linde. Usually there's about 10% on that. It's now about 30% off of that multiple. The future growth can come from new products, projects, and clean energy transition. But the main thing that you focused on was the strong and predictable recurring revenue model. It's not completely recession proof in terms of if there's a slowdown in the economy. Certainly their customers will be purchasing less. But in terms of the tariffs, this is certainly one that we like going forward.
A final one, Karl. How about Pepsi? Also on your radar. Name's down about 20% over the past 12 months. You look at that name, Karl. What's going to get this one moving in the right direction?
Well, so the recent results have led to the low sentiment and the discounted multiple that it faces today. The productivity savings from here, though, and the fact that they should grow volumes, this can offer a little bit of a positivity as we look forward. They have flexibility across their platform with value pricing across their product lines. And it's not off much year to date. As you kind of mentioned, some of the defenses, whether it's staples or utilities, have held in pretty well. But it is off 20% in the past 12 months. That also gives investors a 3.8% yield while they wait and maybe see if they can weather through some of the GLP-1 damage that's been done.
Karl, you speaking about weathering that reminds me that people want these picks right now because they're concerned about weathering everything that's going on at the moment. And so I'm curious if that's what you're hearing from clients. If they're coming to you and saying, where can I hide right now? Where can I look for stability right now?
Oh, absolutely. Well, as your previous guest, Kenny, had mentioned, investors don't like uncertainty, and that's kind of where we are. The announcement, delay, modification, timing and duration or potential duration of what these tariffs could be has created a lot of uncertainty. And the main thing to remember about that, of course, is that they're never deflationary. So as you said, you have clients that are asking, well, do I need to do anything differently or kind of what are you guys looking at? And the challenge is that when you had inflation trending lower from 3% towards the Fed's stated goal of 2%, now facing tariffs, you may see an increase in prices that is not sort of what was on the radar a couple of months ago. So the pressure now that's been announced for the Fed to cut rates soon, not really as a result of further inflation reduction, but to combat a potential rise in unemployment if there's an economic slowdown, and most importantly, economic growth. So we're trying to find names that, as you mentioned, that at least at this point, trying to find things that may have been punished a little bit more than in the past, and maybe you can see a little bit of a rebound here as we move forward. But whether it's in staples or utilities, certainly there are things that can hold up a lot better in this sort of tariff and unknown certainty environment we have.
Karl, we got some big names on deck reporting earnings this week, Tesla, Alphabet. I'm just curious what you make of what you've heard so far during this earnings season, Karl, and what are your expectations for corporate profit growth ahead?
No, certainly. I think, as you mentioned, the couple of names there, Tesla, I think a lot of investors are truly wondering what is the volume level and sort of what will all the tariff announcements mean going forward. Certainly, there's a lot of questions in terms of the ability to focus on areas, whether it's in DOGE or whether it's in the helm of a business. So I think they're looking for any sort of clarity they can have as we move forward throughout 2025. Alphabet is actually a name we own, we like. Certainly they're facing some challenges now, not just from the Department of Justice, but from other areas in terms of the parts of the business that they can kind of grow and move forward from here. But we still like the name. Communication is certainly an area, and these multiples certainly like it as a discount to the market going forward, considering they've been able to grow it in excess of the market. But I think with all the uncertainty, investors really need to see companies deliver on expectations and reassure their investor bases here.
Yeah, definitely. Karl, thank you so much. Appreciate it.